Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. A fairly tight range here today on the currency markets. However, other asset classes did have some volatility. The S&P, you have the energies as well. So here with the currencies, it starts to allude to the market is fairly priced in as we head into the latter half of this week. A lot of data and a lot of news. You have Fed Chair Powell tomorrow morning at 7:30 a.m. Central Time. We also have U.S. PPI data. It's been a number that has come in fairly hot given the trade war pushing prices higher. But on Friday, you have the more important read, CPI. This is what everybody's waiting for. We may not get much of a directional move until that comes out. Now, last night you had trade balance data out of China, and exports dropped, but the overall trade balance tightened up. Now, in the morning, we had German industrial production, and that did come in better than expected. The ECB minutes didn't really give any fresh, groundbreaking news, and the euro did finish a little better on the session. However, major three-star resistance overhead, about 112.5 up to 112.70, has been a ceiling for the currency, and it just cannot get out above there. It may take a miss on CPI data Friday or fresh dovish comments from Fed Chair Powell tomorrow in order to get the euro to break out. There's no real major data coming out of Europe tomorrow morning. But what we also look on the flip side is the dollar index. And the dollar index has a floor near 97. You look back at late April, it broke out above there. In the last couple of weeks, it's hung out above 97 very well. It's checked it as support. What you want to see, and you may not get a rev up in the dollar unless you get a hot number on PPI followed by a hot number on CPI, and then obviously less dovish or even arguably hawkish compared to those dovish comments from Fed Chair Powell. So less dovish or maybe hawkish comments from him. Look for all of that here in the next couple of days, and that's what's going to get you the volatility in the currencies. Now, the yen has been able to capitalize on some fear that the yen is out above a level of 90.58. Now, while above there, it broke out above it, pulled back and checked it yesterday. It's held it well. It's against 91. We do have some solid resistance at 91. However, the bulls are clearly in control above 90.58. What you want to be careful of, though, is look at other safe haven assets. Gold came off the highs today. Treasuries came off the highs today. Now, if the equity market pushes up, the S&P has had a good ceiling at 2,900. If it gets above 2,900 and the dollar index is not falling, then you're going to see the yen see tremendous pressure given the move we saw in the treasury markets. So watch that on the yen. And again, there's some resistance here at 91. And again, there's a previous high at 91.85 that aligns with other technical levels you want to watch. Tonight you have CPI and PPI data coming out of China. Those are inflation reads. And then the commodity currencies, really not a whole lot. They both, Canadian dollar and the Aussie dollar, tried to get going. Today, out of Canada, you had the second day in a row with better than expected data, but again, that price action dissipated. Tomorrow we have trade balance data out of Canada and the home price index read. So watch that, but you have major three-star support below the market at 74, and it hasn't been able to break down below there. If the dollar starts to get going, or if the dollar has safe haven wins due to trade issues with the U.S. and China, then the Canadian can break down below 74. And same thing with the Aussie dollar. There's support at that 70, just below 70. If some of the trade fears start to get going, then you're going to see that Aussie dollar get below there. So keep an eye on all of that. And then again, the data here in the latter half of the week. Give us a call. We're here to talk about anything on the board, 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates, and you can sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss. It is not suitable for all investors. Thanks a lot.